And we're live.
Well, good afternoon, everyone, and thank you for joining us today for the 2024 legislative wrap-up webinar. What Lucas and I will be providing you today is one final review of the ISAC legislative priorities, our legislative objectives, and a review of other significant pieces of legislation affecting counties that did pass or sometimes did not pass before they gavelled out for the year. And so with that, for a piece of housekeeping, if any of you would have any questions, please go to the chat and provide those questions via the chat button that you will see. And we'll try to address them throughout the webinar, but if there are quite a few, we'll address them at the end. And so just to introduce ourselves, Jamie Cashman, the Government Relations Manager, and Lucas Pinkin, the Public Policy Specialist. If you haven't heard of us, well, shame on us, but you should have. But we are the faces, and we're the folks that go to the Capitol each and every day. But there's certainly a number of important team members that are working just as hard for you in terms of advocacy here at Westtown Parkway. And so to begin, Lucas will start off talking about an update. Well, actually, we'll start off with our legislative top priorities, and Lucas will begin with that.
Thank you, Jamie, and good afternoon, everyone. Starting off our top priorities this year on funding of state mandates. And this is a little bit unusual from our normal top priorities in that it's a more of a principle than a piece of legislation or one thing that we're trying to accomplish. It's that idea that, yes, we know that sometimes the state will have requirements of county government. And we're simply saying when those requirements come down, we would like the state to look at paying for those. So not every new requirement and new expense goes to the property taxpayers in each county. So as you might recall, this was the theme of our County Day at the Capitol this year. And I think it's really starting to resonate with legislators when we're making this argument that, yes, mandates may come, even if we don't like them, but let's take a look at who's paying for them and look at options besides it always falling to the property taxpayers. So we do have a couple of examples from this year where the legislature took action to make sure that mandates were in fact funded by the state or other sources besides property tax. So the first one I want to talk about, and I'll go into more detail on the next slide, but that is the cross-county titling legislation. As we've talked about for years now, county treasurers providing vehicle titling services at the county level is a state function, and currently, until this goes into effect January 1st, property taxpayers are subsidizing that service at the local level. And so we said if we're going to have cross-county titling, then we don't want the property taxpayers in one county paying for a service for customers from another county. So part of the cross-county titling legislation was modernization of fees to start to get to a place where the fee for service covers the cost of providing that state service at the local level rather than property taxes. Another good example from this year has to do with training funds for veteran service officers. So we were supportive of a new mandate that basically calls for the national training and certification of county veteran service officers. But we also turned around and said we would like some help paying for that. And so the state appropriated $3,000 to each county every year to help pay for that national training. We think that taking care of our veterans in communities across Iowa is a partnership among the county government, state, and federal. And the state is doing their part by chipping in to help pay for those training opportunities for VSOs. So a couple of good examples, and I would like to take this opportunity to thank you for your continued advocacy when you talk to legislators about unfunded mandates. As I said before, it is starting to resonate. We are starting to hear more and more in subcommittee and committee action. Legislators are starting to recognize when things might be an unfunded mandate. So we'll continue to find opportunities to address those that might already exist.
And I'll take it from here. The next one is on Iowa's natural resources, outdoor recreation, and water quality and quantity. This has been a long time legislative priority for ISAC. The biggest thing that we have been pushing for many years is the funding of the Natural Resource and Outdoor Recreation Trust Fund. There have been bills introduced over the last few years. Last year, there was a bill that would get rid of the local option sales tax and then place a penny statewide. And then that would automatically kick in the trust fund and so forth. So we had some major concerns about that coming on the back of the backfill and so forth. Basically, we would be relying on the state to basically backfill counties from that money that was taken statewide and give that back to local government. Well, this year, the legislature was focused on other pieces of tax legislation that Lucas will get into later, but unfortunately, they did not address it this year. Lastly, our last top priority is in regard to Medicaid funding. One of the biggest aspects of this top priority is the funding or increased funding for the Medicaid reimbursement rates. And so we are very pleased. Not just on on the human services side, but Medicaid funding and those reimbursement rates across the board. We were very pleased when it all shook out in the HHS appropriation bill that there was increased funding for reimbursement rates for mental health providers and psychologists. But like I said, we want those reimbursement rates increased across the board, as we've heard from all of you, specifically in regard to EMS, dentistry, and rural hospitals, among a great many other things. So this is going to still remain, I am confident, one of the top things that we will be looking to address. Lastly, out of this priority is in regard to a waiver that we were asking HHS, Iowa HHS, to ask federal HHS for a waiver to make sure that those that are housed in county jails do not lose their Medicaid coverage for prisoner medical costs. As many of you are aware, this is a tremendous burden on counties and increasing and so forth. So we were pleased the bill was introduced in the House to provide or ask for the waiver specifically for mental health coverage, Medicaid funding for mental health coverage. However, we want to see that done for all medical services provided for those that are housed in the county jail. So while we weren't pleased that it didn't come to a final fruition this year, I have been pleased. Actually, this morning, I've been in contact with the members of the legislature, HHS, Department of Corrections, and so forth. And we already have a meeting set for September to talk about this. And this will be a full coverage for all medical costs for those that are housed in county jails. So I'm optimistic about that moving forward. And now, finally, Lucas will begin our conversation about our legislative objectives.
Okay, and as a reminder, the ISAC legislative objectives are those items that come forth generally from our affiliates approved by our Legislative Policy Committee, and they are those items that we identify a specific problem and develop a solution statement and take that to the legislature to have bills drafted. So for all of these, we, at a minimum, have bills drafted, try and work them through the process after a problem has been identified, and working with our affiliates, legislators, and other stakeholders, come up with a proposed solution to work through the process. So these will be somewhat rapid fire here, just giving you an update on what happened this year. So Starting first with buildings on leased land tax sale. This is a new proposal from the treasurers and basically was calling for authorization to send BLLs to the tax sale for delinquent property taxes. Under current law, the land can go to tax sale, but the improvements upon it in a building on leased land scenario cannot. And so we have seen these cases where the building on leased land owners maybe are recognizing that they're not going to get taken to tax sale and their property taxes become delinquent. They almost certainly have the ability to pay, but for whatever reason are not. So as you know, the tax sale is a good incentive to get those delinquent property taxes taken care of one way or another. So this is simply calling for the BLLs to go to tax sale as well. This passed the House this year, got held up on the Senate side, kind of ran out of time after perfecting the language in the House. So I think this is something that we'll continue to work on and get it through the entire process next year. Moving on to certificates of title. This is another one from the treasurers. This is one that we've been working on for a number of years now. And as I mentioned in the last slide, it's, or 2 slides ago, not only the cross-county titling, but also the modernization of fees for registration titling and perfection of liens, an additional $10 user fee, and that $10 will be retained by the county. So this will be a great service, the cross-county titling, great service for the customers, for auto dealers, and of course the user fee modernization to pay for the service will be good for the taxpayers in each county. So we are looking at probably about $20 million statewide per year when this is fully implemented. And again, this will be less that the county treasurers will have to ask of the Board of Supervisors as far as property tax asking. And the hope is that this will be less that the Board of Supervisors will be asking of the taxpayers. Hopefully they can see this additional revenue and look at their budgets and see if that can't be passed on to the property taxpayer that's currently subsidizing that service. Moving on to the elderly and disabled tax credits, another proposal from the county treasurers that we've been working on off and on for a couple of years. I'll say the biggest hurdle with this one is from House File 718 last year, put in place the new exemption for the 65 plus on the property taxes. And so coming and asking for an increase in the tax credits, although the population is a little bit different, there is plenty of crossover there. So we had difficulty getting this to resonate, coming and asking for additions to this tax credit on the heels of the 65 plus. I'll note that the 65 plus is an exemption simply based on age, where the elderly and disabled tax credits are more the needs-based. It's those that are among our most vulnerable in our society and help to pay for their property tax. So a little bit different population, but having a little bit of difficulty with the legislature getting that to click. Moving on to mobile home titles. Under current law, there's a difference between a mobile home park owner taking title to an abandoned mobile home and say an individual property owner in the unincorporated area taking title to an abandoned mobile home on their property. So we're just trying to streamline those two processes, make it the same regardless of mobile home park or unincorporated acreage, farmstead, whatever it might be. So just trying to make those processes the same regardless. So we had bills drafted in both chambers. We also were looking at attaching this to another mobile home, a larger mobile home piece of legislation. And nothing was done on mobile homes this year. It is kind of a tricky issue to address. So we'll continue to work on that one as well. The motor vehicle titles for non-residents is another new one from the treasurers. And Made some progress this year, but with it being a new one, it's taking just a little bit of time to help legislators understand exactly what we're trying to do. Under current law, a vehicle that lives in Iowa, but the owner does not, it cannot be titled with that non-resident. And so we're simply saying, if the vehicle is staying here full time, and you think of those border counties, you think of the lakes and rivers of Iowa, where it might be a second home, things like that. So the vehicle stays, the owner lives elsewhere, and we just want them to be able to properly title their vehicles, even though they're not a resident of Iowa. The parcel splits and combinations deals with taking care of any delinquent property tax or special assessments, drainage assessments, making sure that any outstanding obligations are taken care of before parcels are split or combined. We've run into a number of issues with various stakeholders involved with this process and the difficulties that this might provide. Some things that could be hangups, for lack of a better term, they're what-ifing it quite a bit. What if this, what if that? So as we continue to work with stakeholders, I think we'll come up with a clear path to make this work without affecting the processes that other stakeholders might be involved with. Property tax sale, postponement, or cancellation, another one from the treasurers. This is a returning objective that passed the House last year, kind of stuck in the Senate this year, and a lot of the pushback has been because the circumstances are so rare, and because there are some provisions in place where gubernatorial proclamations or other means to postpone the tax sale are already in place. Maybe that's good enough. Maybe we don't want to give that much leeway to the county treasurer to make that judgment call. Personally, I disagree with that. Everything I've heard is the treasurers want to have that tax sale when it's scheduled, and it would be very rare circumstances for them to need to postpone, and it would be a need, not a want. But regardless, some pushback from the Senate side. So we'll have a conversation with the LPC this year on whether we want to continue to pursue that one. So I'll stop there, catch my breath, and say, treasurers, you kept us busy this year with your objectives. We made some progress, did get certificates of title done, and some good progress on the others. So we'll keep working on those. And finally, on the Veteran Service Officer Training Funds, as I talked about in the previous slide, this is $3,000 per county per year, specifically earmarked for national training for VSOs and staff, and to make sure that they're trained up. And as you know, when the VSOs are properly trained, up to speed on changing federal guidelines and legislation, they're able to better serve the veterans in our communities, and that's a win all around. So that'll be advantageous to have a little bit of help funding those training opportunities.
I'll take it from here. So next on conduct of elections, these are a number of things that were submitted by the county auditors to improve the conduct of elections. One being to increase the window between the mailing of absentees and then in-person absentee voting. And also there were a number of other things as well. While we were pleased that some of this language was included in the omnibus bill that was introduced again this year, covering a wide variety of different things and ideas from legislators, this was something that we were pleased did not finally come to finality, in that there are a number of different things that auditors would not be pleased with in regard to going to a three envelope system for absentees, and then also getting rid of drop boxes, among other things. And so when everything finally shook out, the House passed the bill, the Senate had it on their debate calendar until the final end, but fortunately they did not take it up. And so, but we can expect again for elections to be addressed again next year. Next is on the confidentiality of information, where we've seen not only in mental health and public health, that we've seen where the state law is actually more stringent than federal law. And so what we were asking basically was basically to have the same, basically align it with federal law in regard to confidentiality. And while finally nothing finally shook out in regard to this, I've had conversations with the HHS, and as I'll talk about this a little bit later on behavioral health and some of the other things that pertaining to that, that there is going to be a number of follow-up bills in regard to behavioral health, and this is something that we will continue to push moving forward to make sure that they align with state law and the federal law align. The Emergency Preparedness Supply Weekend is something that we've been pushing for the last few years. Basically, it is the same thing and falls on the same dates in terms of the school sales tax holiday. As we've already seen, unfortunately, a number of natural disasters affecting Iowa already this year. Preparedness and additional resources for that are needed more than ever. And so it would provide the same sales tax relief for things like generators, tarps, shop vacs, that sort of thing. And so while bills were introduced in House and Senate Ways and Means Committee, unfortunately, they did not pass when everything was done. Next is on emergency management funding and governance. This has been a long-standing issue, not well, in recent years, I will say that in regard to the ability and the authority for the EMS levy, and then also in regard to governance, the makeup of the EMA commission and so forth. And so while there was legislation introduced in regard to levy authority and so forth, there wasn't a consensus amongst all parties between. There's still negotiations that need to occur between county supervisors and emergency management to develop final consensus on this. So this remains a work in progress. Eminent domain, we still remain in strong opposition to the use of eminent domain in all cases in regard to carbon-based pipelines. And so this year, the legislation that was introduced specifically in the House would provide some additional legal revenues for landowners that they would be able to go in district court to be able to object to an eminent domain filing and so forth. So this legislation passed the House for the first time. It actually advanced in the Senate and made it out of a subcommittee, but it did not make it out of a standing committee in the Senate. So this remains a top issue for it. In-service disability allowance. This was brought last year during the ISAC Legislative Policy Committee by a few sheriffs, and underneath the Back the Blue legislation in 2020, it was amended to include under in-service disability retirement allowance a member who took a settlement and waived their allowance, or who is receiving an in-service disability, the employer shall furnish reasonable medical costs associated with the disability. This could result in costing a significant amount of taxpayer dollars, as this is retroactive, and former members who took settlements and waived allowances can now come back and seek all the medical costs prior to this legislative change. And so we were just asking to see that change be eliminated, to eliminate the practice from this occurring. We'll talk about this in a little bit. I think that the primary focus in terms of addressing the main issues for the Iowa sheriffs and deputies this year was their retirement bill. And so I'll talk about that later on. But so this did not pass. Next was on increased funding for juvenile detention. And so while in the HHS appropriations bill, they did codify and protect the model of funding that is provided for juvenile detention, they did not increase the amount. I think one of the things that we'll be working on, the many things we'll be working on in the interim, is working with the various juvenile detention districts to provide or to try and find consensus on what is the best way in terms of between the fund juvenile detention, and obviously seek additional parity between the state and what they provide and what counties provide. But in terms of how the funding is set up between bed days versus actual cost expenses, there remain some differences between the various juvenile detention districts. And then on resource enhancement and protection for REAP funding and so forth, unfortunately, they did not fund REAP to the full $20 million amount as required in code. They funded it again at $12 million like they've done over the last few years. And then lastly, on treatment for persons in the justice system and civil commitments, a lot of the advancements in this were addressed to some part, not all, in regard to the behavioral health systems service bill. And that we'll be talking about that a little bit later. And then obviously updating the civil commitment process, just like a number of things that I'll talk about on behavioral health, that needs to be included, just like I had mentioned about that with confidentiality of information. So that concludes our review of the ISAC legislative objectives for 2024. And so
Hey, Jamie?
Yes.
Let me hop in. We did have a question, give you a chance to catch your breath there. And the question that came in was related to the $3,000 per county for veteran service officer national training. And the question was, does that increase their budget by $3,000 or how does that work? So let's take a step back. Each county currently gets $10,000 per year for service for veterans. The $3,000 will be in addition, specifically earmarked for that national training. So the way that national training might be paid for currently is out of that $10,000, or it could be tax asking. It could be, an appropriation paid for by property tax. So what I would say is, if it was coming out of that 10,000, it should be an additional 3,000. So in other words, you would want to use your 10,000 allocation for service to veterans plus your $3,000 for the national training. If it was a case where property tax dollars were paying for that national training, whatever that cost might be, then that's decisions for the county commission, the board of supervisors to take a look at. Now, my personal opinion would be if you can pass on the savings to the property taxpayers, that's a good option. If you can continue to ask that of the property taxpayers and you see, good return on investment, which I think you would, by paying for services for veterans or the VSO's office, that's a good option as well. So to answer the question, not necessarily an increase, but you do have that opportunity to use that new earmarked funding in addition to other funding that might come in, or there might be an opportunity to pass that savings on to the property taxpayers.
All right, and so moving on, as I mentioned earlier, there are a number of bills that we followed of significant pieces of legislation affecting counties that we either were monitoring or supported, or in some cases opposed. And so the first one, as I mentioned earlier, was the Behavioral Health Service System Bill, House File 2673, that I'm sure many of you are aware. Basically, what this bill does is it combines all the services that were previously provided under the regions for mental health and combines them into 7 behavioral health districts, and substance use would also fall underneath that. And so as we are in the interim right now, they're in the development of creating this new system. A couple of weeks ago, we had a webinar to talk about just the basic parameters of this legislation and how it would work from what we know so far. We have that on our website if you'd want to check that out. I'm not going to do a deep dive into the bill right now, but there's information provided there. And then also, I wanted to inform you, you should have received an email from us earlier today that HHS will be conducting public comment sessions starting tomorrow and then moving into next week to talk about, to outline all the various things in regard to the development of the state plan, talking about how the administrative service organizations, those would be the ones that will basically will oversee and provide management for these new districts, how they would be selected, and the time frame accordingly. So please tune into those. Next is a piece of legislation that we are in strong support of in regard to bonding and insurance for county officers. And so what this bill does, it adds insurance and adds that as to meet the financial requirements for county officers instead of only being able to utilize a bond. So we're in strong support of that. And next is in regard to county attorneys and allowing them to have for professional gun permits for additional protection. And we were in strong support of that bill as well. Next is on the guaranteed income program ban. We were actually in opposition to this bill because of its infringement on local control. What this bill does is basically bans counties from providing a recent pilot project, mostly what we've seen here in central Iowa, that combined ARPA funding and then also from private businesses that would provide $500 in financial assistance for counties in need, not counties, for families in need, correct? So while we not necessarily in advocating for the program itself, we were in strong opposition against counties to be able to not provide this. And so we'll continue for when these bills continue to pop up, we will continue to strongly support local control. Next is something that I mentioned before into sheriffs and deputies retirement in terms of IPERS benefits and so forth. We were in strong support of this bill as we look, and not only in local law enforcement, but between all county offices to be able to attract and retain high quality workforce is needed more than ever. And so what this bill does, it modifies in terms of the contribution rates and provides additional benefits for sheriffs and deputies retirement. So we're pleased about that. Next is on traffic cameras. And this has been debated for quite a few years now. And while we did not support certainly many of the aspects of this legislation, it doesn't call for an outright ban. And so what the bill does is basically, if the community would be interested in putting in a traffic camera, they would have to, and I know this will be developed through rules, would have to petition the DOT to outline how public safety would be improved by putting these cameras in place. The other major component of this is in regard to the revenue. The revenue would be restricted to just for public safety purposes. So it wouldn't be something that you could utilize for, go back into the general fund and so forth. This would be just strictly for public safety. With that, I'll turn it over to Lucas for stormwater.
All right. Another piece of enacted legislation, and we were opposed to this idea of preemption on stormwater and topsoil management. And so what the bill does is for topsoil, local governments cannot be more restrictive than the NPDES General Permit Number 2. If you're interested in this legislation, you probably know what General Permit Number 2 is, so I won't get into the weeds on that, but can't be more restrictive than that on topsoil. And for stormwater, you can be more restrictive than federal or state code if the locals pay for it. So this legislation that started last year initially was straight preemption. An amendment this year that probably was the final piece that got it through, basically said, okay, the counties and cities can be more restrictive, but rather than the developer and then by extension the property owners paying for any sort of mitigation efforts and the like, the local government has to pay for it. So rather than just the homeowners in a new development, the entire jurisdiction would pay for the design work, the engineering, and so on. So we think that just because legislation is enacted, that doesn't make water behave, right? There are different circumstances. This should absolutely be a local control issue. So those closest to, for example, the movement of water or the amount of topsoil can decide what's appropriate for their jurisdiction. So this certainly infringes on that. And in the case of stormwater, does still provide a little bit of local control, but the property taxpayers of each jurisdiction would get to pay for that. One final piece on that is it does prohibit the use of special assessments to take care of these sorts of things. So it would be all property taxpayers in each jurisdiction. And moving on to a couple of pieces of legislation that we're supportive or undecided on, but essentially gives more local control. So we talked about the defense that we have to play and fighting to maintain local control. These were a few pieces of legislation passed this year that actually give more local control. So we wanted to make sure to highlight when this happens to give proper credit to the legislature for looking at these sorts of options and affording this local control. So starting with assessor salary, House File 2269 allows the conference board to go higher or lower for the salary for a new assessor when they're filling a vacancy. So currently that salary would be set for the term of the assessor, or at least for that budget year. So if you're looking to replace an assessor, could go a couple ways, right? Maybe the conference board wants to go lower. You hear of those examples of the retiring assessor had 20 years of experience. Why should the new person make the same salary? Now, what I think we're probably seeing more of is the other side of that, where it's getting harder and harder to attract assessors into certain jurisdictions. You think of some of the smaller counties statewide that we've seen have difficulty attracting assessors. So you may have to bump those salaries. Personally, I think that's much more likely to be the case, but regardless of how it plays out, this legislation gives that authority and decision-making to the conference board in each jurisdiction. Similarly, the Board of Review dates, Senate File 451 was enacted this year, and under current law, May 1st is set as the commencement date for the Board of Review. This simply opens it up that their first session is between May 1st, May 7th. Just gives a little bit more flexibility for that all-volunteer board to get that first meeting and get their work done. The third one I wanted to touch on, and we'll talk a lot more about this in coming slides, but county compensation boards, the way that the legislation was crafted, that was actually enacted this year, was if a board of supervisors wants to have a compensation board, they can. If they want to take on those responsibilities themselves, they can do that. So I know we have members that are just a little bit nervous about this, but I will say it does in fact give local control to the Board of Supervisors to decide what they think is best for their jurisdiction. And then finally, House File 2264, related to the use of county funds, allows for county funds to be used to be used in partnership with ecclesiastical and sectarian organizations, as long as the program, project, whatever they're working on is for the public good, and as long as there's no religious or education or any programming that might be required from that sectarian organization. So as long as we keep that clear and it's for a public good, that would be allowed now. And moving on to our large, for this year, tax omnibus bill. So the big highlight item of this was the speeding up of the income tax reduction that the legislature has been working on for a number of years. Now, related more towards what counties might be specifically concerned with is a little bit of cleanup on the property tax provisions from last year's House File 718. So to take a step back and kind of make sure that we're all kind of on the same page, part of House File 718 was what we'll call the ratchets. And that is the calculation that would reduce your general basic and rural basic levy rates when your valuation growth is over a certain threshold. So the way that came out in 718 was over 3% growth and over 6% growth were the thresholds. And so you would divide by, or you would take your current year certified taxes divided by, in the case of 3% to 5.99%, you divide by 102% of your current year taxable valuation. If you're over 6% growth, you divide by 103%. So effectively, and it's not exact, but effectively, you're talking about reducing that 3% by 2%. So you would experience 1% growth. Now, what I think the legislature realized is if you were at, let's call it 2.9% growth, you would capture that full 2.9%. There's no reduction for less than 3%. If you're at 3.1, you would lose about 2% of that growth and kick you down to about 1.1%. So they're realizing that they've created cliffs. So what they're attempting to do with this legislation is to soften that out a little bit. So the new thresholds are at 2.75, 4, and 6% growth. And rather than dividing by either 102% rather than dividing by 102% or 103%, it'll now be 3 stages: 101, 102, 103%. So hopefully that's less reduction, gives a little bit of a longer runway as counties are trying to bring levy rates down if they are seeing that valuation growth. And I guess we'll see over time, but I would say it's very difficult to try and pick winners and losers, right? So since this legislation has passed, we're getting questions in our office about, is this good for the county? Is it bad for my county? And I would say it's good on the whole to smooth this out. And where your county falls on any given year will depend on if you would have been better with this legislation, with House File 718. You'd almost certainly be unaffected and okay without House File 718. But my point is, there aren't really winners and losers as much as it might just affect you differently year to year. But then the next year is coming, and we'll see what your valuation growth does then. I'll take this opportunity to say this legislation was a little bit of fixing some pretty obvious things that they saw from House File 718. We fully expect that this will be an ongoing multiple year process as we continue to look at addressing some issues within the property tax system. So just as we told you last year on the heels of 718, we'll say again, this is probably not the end. We'll probably continue to work on property tax legislation over the next few years. And please continue to send the troubles that you've experienced or some things that might need to be addressed with the legislature, as we're all kind of in this together and growing in the new law together. Another thing that was addressed, and this was, I believe, a direct result of some of the feedback that legislators got from not only ISAC, but county officials in particular, is the timeline of getting information to the Department of Management from all local jurisdictions on their valuations, and then the county auditor turning around and getting out the new taxpayer mailing. So previously it was due by March 15th, the report's due by March 15th, the auditor had to get out the mailing by March 20th. So very quick turnaround, regardless of whether counties were doing this in-house or a third-party vendor. That 5 days was just a very quick turnaround. So what they've done is change the due date on that valuation report to March 5th. And then they also bring back the mailing date to March 15th. But that 10 days will hopefully provide ample time for all local jurisdictions to get their valuation reports in, for the Department of Management to get that turned around, and county auditors to get the mailing out either from the county itself or from that third-party vendor. They made some changes to the statement itself. The one that jumps out to me in particular is the change from 100,000 to 300,000 when you're giving examples of what taxes might look like for a residential property valued at 100,000 and a commercial property valued at 100,000. For those of you that work with this closely, you know that whether it's residential or commercial, they are paying the same on $100,000 of valuation because of the business property tax credit. So I'll be so bold as to say it was kind of worthless to compare the two that were going to be exactly the same. So moving that to 300,000 will give a little bit better idea of the differences between residential and commercial when you factor in the rollbacks being different for those two classifications. And then finally, just a little piece of information. It does require that all the information found in the application for the homestead exemption for the 65 plus, all that information is confidential. I'm going to take just a brief moment to look at more questions, make sure we're not skipping past. Okay, let me address this one because it's on the taxpayer mailing. Any chance of the legislature giving funding for the huge amount of mailing and printing these taxpayer statements? That has been a conversation. As you know, the county or the county auditor's office is absorbing the cost of that mailing. Other local jurisdictions, cities and schools are not contributing. The idea being that general basic levy covers all the property owners, all the property taxpayers in the county. So it kind of makes sense that you would capture them all with that levy rather than trying to piece together city and school levies and some sort of cost sharing. So administratively, it makes sense, but I do understand that it's not ideal for the counties to come up with or to try and figure out how to come up with the funding for that huge expense. So to answer the question, I haven't heard much about the state being willing to jump in and help pay for that. But I think that will be an ongoing conversation, as well as, frankly, are the taxpayers getting a good return on investment for that mailing? If it's causing confusion, if it's not really providing new information, then why are we taking on this large expense? Why are they, the property taxpayers, taking on that large expense for a mailing? So that'll be an ongoing conversation. So moving on to same legislation, but it also dealt with the County Compensation Board. To take a step back, as you probably know, we see compensation board legislation every year in different forms. So we knew at the beginning of this year that the legislature really wanted to do something. And with the different proposals that come up, we continue to push back and say, leave it alone and work to improve it, right? So we've seen the proposals to just get rid of the compensation board. We've seen proposals to limit the amount that could be given in wages or raises in any given year. We've seen proposals to change the membership of the compensation board. So we continue to push back and say, leave it as it is, but let's work on improving it. But we knew that the legislature could very well try and stick it in other legislation to get it done. And that's exactly what happened. They put it into a large tax bill. Now, it is good for local control, as I said earlier. It does allow the Board of Supervisors to decide if they want to use the compensation board or not. The way that it's written, all compensation boards will be dissolved as of July 1st. So the Board of Supervisors will need to take action to put compensation board back in place. It's simple action of the board, simple majority to do that. If the compensation board is established, they would have the same authority and the same responsibilities as they currently do, with one notable addition, which is something that we've been asking for a number of years, which is what we call the show your work provision. It's basically saying when you make a recommendation, show the Board of Supervisors your documentation, the comparisons that you did, the other research that you did, and why you're making the salary adjustment recommendation that you're making. So that will remain the same with that new addition. When the recommendation gets to the Board of Supervisors, two things that have changed. First, they can go higher or lower than the recommendation. Currently, they could only go lower than the recommendation. And the second piece is that the other elected officials can be separated out. So currently, if there was a reduction in the recommendation, the same percentage would need to be applied to all elected officials. So that piece is removed. So you can go higher or lower, and you can separate the elected officials. And when I say you, of course, I mean the Board of Supervisors getting that recommendation. Now, if the Board of Supervisors decides to take on those requirements and responsibilities themselves, does away with the compensation board, they should know that everything in current code, all of the requirements of the compensation board would now fall on them. All of that new requirement of show your work, do the documentation. What are you coming up with as far as comparisons? And at the end of the day, it's what should this position be paid? So that would all fall on the Board of Supervisors if they choose to do away with the compensation board. And then, ultimately they would still be able to make the decisions for their budget, but all the roles and responsibilities of the comp board would fall to them. So I'll take this opportunity to say, we know there will be many more questions on this. Please continue to send them into our office. We are planning to put together an informational page or two that kind of lays all this out, along with things to be thinking about. And then also, we do have a sample resolution in the works, so that if the Board of Supervisors wants to take action to put a compensation board in place, we don't have 99 jurisdictions reinventing the wheel. So we're working on some language to help out in that regard as well. So stay tuned on county compensation boards. And as I mentioned before, a lot of the fun that we get to have is registering against and working to defeat certain pieces of legislation. And we have talked about some that we're able to get through, but wanted to highlight just a few that we were successful in defeating this year. First, let's go right back to county compensation boards. I'll try and be more brief this time, but We did see legislation again at the beginning of this session that was, they were doing those things like just abolish the compensation board, increases limited to the increase in the consumer price index, some unusual proposals that we were not in favor of. So we were successful in pushing back on those. So that's good. And I will say, if we can take a moment to find any sort of silver lining, we probably won't deal with county compensation board legislation for a while. So I guess with them passing something, we don't have to fight all of the, shall I say, more silly ideas that sometimes come up. Supervisor district plans, another one that we continue to see every year, dealing with the representation plans that certain counties must adopt. As you know, there are currently 3 distinct plans that supervisors might operate under. At large, so your plan 1, at large, live anywhere, vote countywide. Plan 2, you live in an equal population district, but the vote is countywide. And plan 3 is you live in and get voted in by equal population districts. So the proposals that we've seen have been dictating that certain counties have to go into that plan 3, the live in district, vote by district. And the way they're choosing to address this in most of the proposals is by population. So we've seen counties greater than 60,000 in population, greater than 100,000. And the legislation that moved the furthest this year was those counties of a population 125,000 or more. So that would be the top 5 in the top 5 counties in population in Iowa would have to adopt Plan 3. ISAC does not have a position on supervisor districts as far as which one county should be using. And most counties, I don't know if they have a preference, because that's something that's up to the voters. So that's what we continue to say to legislators is this is the ultimate local control. The voters get to decide how they're represented. And we believe that decision should remain with the voters, regardless of the size of the county. So that one was moving quite a bit in the Senate this year. Didn't really get started in the House. We fully expect that to come up again next year. And then really quick on the last 2, wind turbine siting proposals for statewide standards, minimum setbacks, things like this, where we believe those local officials can make those decisions for their jurisdiction. Not every jurisdiction is the same, of course, so that should be decided at the local level. And then on energy source regulation, we saw a proposal in Senate File 411 dealing with prohibition on counties or cities regulating energy sources or limiting consumer access. The preemption alone would be bad enough, but the way that this was crafted could include a lot more than what was intended. So we were able to push back on that. And I know a lot of supervisors were very engaged on that legislation as well. So we were able to push back this year on that. Jamie, I'm going to turn it back over to you as I catch my breath. Let's talk about the process for next year.
Yes, so we're already in the midst of the development for the 2025 legislative package. We are seeking the proposals from the full membership, although we're humbly requesting that you work with your affiliate to submit those proposals. And then as they move through the legislative process, through the legislative policy committee. However, we certainly consider individual proposals for membership. So please feel free to do that as well. And so July 26th is the deadline to receive the legislative policy request forms. On August 20th, right before the annual conference, the ISAC Legislative Policy Committee will meet for the first time. And again, that composed of 2 representatives from each of your affiliates. And then that first meeting, we will review all of the proposals. And then from that, we'll seek recommendations from out of those proposals, what will move forward to the next LPC meeting in September. And then based on that meeting, they will wrap up in terms of their final recommendation to the recommendations to the full membership, of which we will then again in October go through the online voting by the full ISAC membership. And then based on that and those recommendations, that will go to the ISAC board on November 13th for final ratification of the full package, and then also to set the top priorities for 2025. So we're already in the midst of it right now, and we'll keep on moving forward. And so to kind of wrap everything up, as we identified, there are a number of issues that we're still going to continue to work strongly on behalf going on, not only for next year, but also certainly during the interim. As I mentioned, certainly on behavioral health, that is something that's certainly a work in progress. And as additional information becomes known, we'll certainly get that out to you. If we have to do another webinar, we'll do that as well. I know there's a number of questions members have in regard to now as we go away from the regions to the districts, what do we do in terms of county employment and county of record and so forth, existing assets and so forth. So we are continuing to try to find those answers for all of you, so stay tuned. Also too, as last year, HHS had that, that alignment assessment and so forth that addressed behavioral health this year. We're hearing again, and they're in the midst of it right now in regard to addressing the other recommendations coming out specifically for public health. And so that's something that is certainly another work in progress, and we can expect legislation for 2025 to address those recommendations and so forth. And so we'll certainly answer some questions here as well, but also we wanted to let you know, I know it's a rather quick overview of everything that transpired this session. We will also be providing a bill summary book that covers all the bills that affect counties from the 2024 legislative session, and you can expect that sometime in July. So with that, open it up. Lucas, how are we doing on questions?
Yeah, we've got a couple that have come in, and please continue to send those in the Q&A at the bottom of your screen there. But a couple more on compensation board that we'll address. So first is, when would you establish the new compensation board? What date? So this takes effect July 1. So effectively July 1, your compensation board will be dissolved. So there's no requirement on when action would need to be taken. You could, I guess, in that first week of July, you could probably establish a compensation board if that's what your board of supervisors wanted to do. But my recommendation would be thinking about it now and in the early fall, so that you could decide what your county wants to do, and if you are going to establish a compensation board, get them in place so they can begin their work ahead of or as close to on the normal schedule as possible, right? So that intersection of what is the board doing with non-elected employees? What are they doing with collective bargaining agreements? All of these decisions that are going into wages for different employees ahead of establishing a budget. So you'll be able to decide in your county how that timeline works. But so the earliest would be early July. And then, my recommendation would be just make sure you give yourself enough time through the budgeting process if you want to establish and have that compensation board complete their work and come up with recommendations for the Board of Supervisors. And then the second one on compensation board, let's see, if they decide to reestablish, do all elected officials need to reappoint representatives? The short answer is yes. So it'll be dissolved. The same procedures for that initial appointment will be in place. And a quick aside, very personal opinion, but if your representative was less than ideal, or you were not pleased with their performance, maybe this is the opportunity to find someone new without hurting someone's feelings, right? By kicking them off. They're getting kicked off regardless, so this could be an opportunity to find someone better. So that, yes, so that will be something that each of the electeds will have to do, is find a representative. It could be the person that previously served, or you could find someone new. And then just got a question. You expect supervisor districts to be brought up again? The short answer is yes. I fully expect that to come up again. I know for the person that asked this is not good news, because it would affect, well, actually, I don't know if it would affect your county anymore, but 125,000 population seems to be the number where they have the votes, unfortunately. So if they stick with that plan, I think the votes are there in the Senate. The House is probably where we'll continue to have conversations. I would encourage you to have those conversations with your representatives and ask them to leave this up to the voters to decide how they want to be represented. And let me see, I thought there was one more. Compensation board, yes. Will they still have terms of service for the compensation board as it is now? Yes, everything, to my knowledge, everything as far as terms of service will remain the same. And then the final question that I'm seeing is, did legislation regarding forest reserve pass this year? No, there was a proposal that would leave it up to each board of supervisors to decide. That passed the House. When it got over to the Senate, I think they realized that maybe that was a little bit too much local control to possibly have different ways of doing a property tax exemption throughout the state. So what the Senate was looking at, and I think this is probably where the conversation begins next January, is looking at a fee in lieu of property tax. And the way they crafted this was to have a certain fee for county of residence. So if your homestead is in this county where you own forest reserve land, you would pay a certain amount. If you're in a contiguous county, you would pay a little bit more. And if you're a non-resident, you would, then they established a formula that's a little too complicated for the amount of time that we have in our venue here, but a formula in place for how much is paid. And so I think that's probably where the conversation starts next year, is leave the exemption kind of how it is, but also charge a little bit. And that goes to, I think, a lot of what boards of supervisors across the state have been saying is, we see the value in the program, but at the same time, should those owners be chipping in a little bit, because they are still getting public services? So should they chip in a little bit, just as other property owners are? And I don't know if I'm seeing any other questions. There is, okay, so there is sorry, Jamie, there is one final question on, do they reestablish the staggered terms for the compensation board? I don't know right off how you would do that. My assumption is that you need to establish the stagger just as you would like after redistricting for supervisors, where you might draw lots to see who has the shorter term to begin with. That's an assumption. We will get an answer to that and make sure that that when we put out more information on the compensation board legislation, we'll make sure to address that.
All right. To come to a conclusion here, first of all, if there are additional questions that you might have as a result of the webinar or things that just pop up, maybe some other bills that we didn't cover that you'll see in the bill summary book, don't hesitate to continue to reach out to Lucas and I with any questions that you might have. And certainly, Lucas and I cannot thank you enough for your assistance and support this legislative session. We put out updates every week of the session and ask for comment and so forth. And so we certainly appreciate the responses and the follow up and so forth. We can't do it without you. And so we look forward again. Thank you, and we look forward to working with all of you on the development of the 2025 legislative package, and then going right into the session again in 2025. And so again, thank you, and we look forward to seeing you all in August.